Hello and welcome to the Fibonacci free video for Monday, January 9th. This is David, and gosh, I am looking at feeder cattle here this evening, and in particular, the March 2023 feeder cattle futures contract. And you might be asking, well, why? And the reality is that we can look across a range of markets and see those that are potentially giving us some interesting setups, and I think this is one. So I'm going to start by observing that this move down from last summer's high in this market, to my eye, looks trend-like. So in the Elliott wave world, that's moves that tend to have a 1, 2, 3, 4, 5 wave structure. And central to that is a move down in the middle, which is a good bit longer than the other moves and typically stronger. And that's what we see here, such that the bounce in a fourth wave towards the end of the move stays well clear of the first wave. And this has that distinctive 5 wave appearance to it. Meanwhile, the bounce here from October lows into highs last week, well, that looks a lot choppier. So we go up, we come down, we go up, and then we come back in the prior range. Remember, to see a trend move, we want to see bounces that stay clear of the prior ranges. But here we go a little bit higher, slightly higher high, back in the prior range, back below these swings. Then we go modestly higher and at least back below this swing, right? And this swing, we, at least today, we broke through this swing. We haven't taken out this swing, but it has a very different appearance. Add to that if it is going to turn back down before taking out last year's high, then it needs to do it pretty soon. It's already retraced a Fibonacci 78.6%, or very close to it. We've got roughly equal legs to the upside. If we view this as the largest pullback within the advance, measure this leg up, the leg up subsequent. Those are roughly equal at last week's high. And then also look at the swing low to swing high that ended the previous trend move to the upside, right? So that would be this leg right here, project that upwards, and that projects to equal legs up. Again, just near last week's high. So all of those things come together to give us potentially daily resistance where we turn down from last week. And then if we look at the move back down from last week's high on some shorter time frames, once again, we've got action which potentially looks trend-like, relatively sharp, not terribly wiggly, down from last week's high here on the 15-minute chart. Now, there's more room to retrace more of this decline. It doesn't have to turn down from today's hit of a 38.2% retrace, but it is certainly a reasonable place to turn down from. Furthermore, if we look at this bounce, right, first into a swing low this morning, just after the open, and then measure a subsequent leg up here, those are roughly equal at today's high of the day and that 38.2 retrace. Now, it could retrace further coming up, the 50%, the 61.8, even the 78.6. But if it is still wiggly and starts to turn downwards, that would have me looking to short against the swing high. I've already started shorting this market in here today, but certainly against last week's high, I like the idea. Again, so long as this looks wiggly relative to the move down from last week's high, which was at a longer time frame 78.6 retrace, as we talked about. Doesn't mean it goes, but I like this spot as a spot to try if you want to be a little more conservative. then you can wait on the daily chart until we get a clean signal. Whether you consider that to be a break of the low of the high bar, that would be the low of Wednesday's daily candle. We haven't taken that out yet. Or it could be the swing low, which preceded the move into that high. That would be last Tuesday's low. Either one of those could be a trigger for a short against last week's high. Or alternatively, right, back on the intraday charts, waiting for a reversal on intraday timeframes. Again, that could either be taking out a swing low, or it could be, a break of a trend line up from that low. Either way, right, wait for some sort of trigger, whether from today's high or from a resistance level higher. That would look like a spot to potentially explore the downside here in feeder cattle. There are also some reasons to think that maybe, just maybe, we're getting a turn down from or in the equity markets from today's high. We'll explore that more in the premium video, which I will get to in just a moment. Until then, as always, folks, good trading, and I will see you at the next update. Hey, David here with Simpler Trading. Thanks for taking a few minutes to watch this video. I hope you found it useful. And if you did, please help us out. Click the like button. You can also add your comments below. We love to read those and respond to them. You can also click the bell icon. That will alert you whenever we have new and updated videos. And if you want to watch us trade in real time with our own money, you can visit simplertrading.com to learn how to sign up. Until I see you again, as always, good trading, and we'll see you at the next video.